Hello, everybody, and welcome to our channel, Accountancy Bridge Coach. And in last week, we learned about accounting equation. In continuation to that, today we are going to learn on how we are going to implement this accounting equation. Along with, we are going to solve problems. So, once again, to recap, accounting equation says that assets is equal to equity plus liabilities. So, the essence of this accounting equation is whenever there is a transaction that is taking place, the change in the asset side should be equal to the change in the equity plus liabilities, that is the right hand side of the equation. So this is the essence of this accounting equation, and if this is being done, is ensured, then your financial statement would tally. The balance sheet, till the balance sheet, everything will tally. In today's video, we are going to see a comprehensive list of all the transactions that would be tested in your exams, categorizing each of the account heads. So I have categorized as capital related transactions, purchase related transactions, sales related, expense related, and others miscellaneous. So in when it comes to capital related, it would be nothing but transactions including investing capital into the business or taking capital for drawings purpose, personal use. When it is purchase related, it would be either cash purchase, credit purchase, settlement to the creditors, or goods lost by fire. When it comes to sales related transaction, it could be cash sales or credit sales, income which is accrued but not yet received, which is the debtors, and when the debtor makes the payment. When it comes to expense related, it would be like expense which is incurred but not paid, or if it is partly paid, or any expense which is being paid in advance, like prepaid insurance. Other kinds of transactions could include income which is received in advance and any depreciation on machinery. So all these transactions are, it is a comprehensive list of all transactions that would be covered in any organization, and even in your exams this would be tested. So we are going to see the examples on how this accounting equation flows with problems being solved. So do not forget to stay till end and watch this video. First, capital related transactions. Owner invested capital in the business, say rupees 1 lakh. So what has happened? Owner's capital is one part of the transaction, other side is cash has increased. So when we see the accounting equation, the owner's capital has increased, so capital has increased, which is the one side of the accounting equation. Other side, which is the cash, has increased, that means increase in the assets. Moving on to the next transaction. Owner withdrew for personal use. So, what is this for? When we say withdrew for personal use, it is nothing but drawings. So, say rupees 5,000, there is drawings being made. Drawings is always a reduction in the capital. So, your capital reduces, and whereas the cash is being taken out of the business, so cash reduces, and hence asset reduce. Once again, the impact on the both sides of the equation is same, so making it that the accounting equation tallies. Next is sale related transaction. First is sale of goods. So let us see, when we say sale of goods, first example is goods costing 200 rupees is being sold for 300, that means it is a profit. So when it is a profit, how does it get impacted in the accounting equation? So one is, whenever there is a sale of good, there is a reduction in the stock to the extent of the cost. So stock is reduced by 200 rupees, and we receive cash, assuming it is a cash sale, and that is plus 300. So net there is a profit of 100 rupees. So you can see that in your asset side there is a minus 200 and plus 300, making it a plus 100 on your asset side, whereas there is a profit on the right hand side. So profit is nothing but an increase in the capital, which is also 100 rupees. So you see that assets is equal to equity plus liability. When it comes to loss, that means goods costing 500 rupees is being sold for only 100 rupees. That means once again, on one side, that is asset side, there is a reduction in the stock to the extent of the cost price of the goods, that is minus 200, and we received only 100 rupees. So cash received for rupees 100. So you can see that on the asset side there is minus 200 plus 100, making it net of minus 100 as the impact on the asset side. So what does we see in the liability side? There is loss of rupees, loss of minus 100, right? Loss means what? Loss of 100 rupees means it is a reduction in the capital. So the capitals is also reducing by 100 rupees, and the asset side is also reducing by 100 rupees. Once again, the accounting equation has tallied. Next is income accrued but not received, which is nothing but a credit sale. So what happens? The two sides of the credit sale. So the debtor balance is increasing, stock is reducing, right? And the other side, if it is a profit, then it would impact the capital. That's what we saw in the example. When there is a receipt from the debtors, what happens? The debtor balance reduces and cash increases, so the net impact on the asset side is zero. So there is no, once again, the impact on the asset side is zero, and there is no impact on the equity and liability side. Once again, the accounting equation is tally. So this is the concept. Next, purchase related transactions. Cash or credit purchase, let us see one by one. Cash purchase, you see that when we purchase goods, we pay cash and receive stock. So cash reduces and stock increases. Once again, there is nil impact on the asset side. Both cash and stock is on the assets. Both are assets, right? So there is increase in the one asset, that is stock, and reduction in the other asset, which is cash. So nil impact on the asset side. So that means, once again, the accounting equation tallies. Whereas when it comes to credit purchase, what happens? There is increase in stock and there is increase in the creditors. So once again, there is assets increasing, the one side of equation is increasing, and creditors, which is liabilities, the other side of the equation is also increasing. Once again, the equation will again tally, because the change in the asset side is equal to the cumulative change of the equities and liabilities is equal. So the accounting equation will tally. So for it, every transaction, it is to be ensured whether this assets equal to equity plus liability, this equation is getting tallied. Only if every transaction contribute to tallying of this equation, you will see that the total, whether it is a trial balance or a balance sheet, it will tally at the end. Okay. The continuation of this credit purchase is nothing but settlement to the creditors. What happens in that case? When the creditors is being paid, the creditors balance will reduce. For payment, what we need to pay cash. So cash balance reduces. On the other hand, creditors balance also reduces. So we see that there is reduction in assets, at the same time there is a reduction in the liabilities, which also means that the impact on the both the sides of the equation is the same. So assets is equal to equity plus liabilities. Now moving on to the next example, that is loss due to fire. So what happens? There is some stock which was got lost due to fire. So one side, it is stock getting reduced. So reduction in stock, which means assets is getting reduced. Correct. Whereas on the other side, there is a loss. Loss means what? It is a reduction on against the capital. So once again, capital reduces to that extent. You see that there is a reduction in the assets. To same extent, there is a reduction in the capital. Once again, the accounting equation is matching. Third is the credit purchase of furniture. So usually when furniture is purchased for cash, is what the problems generally give. So what happens? Furniture, which is an asset that is coming in, and the other thing, we are making payment. So cash is another asset which is going out, net impact is zero on the assets. So we awarded case of a credit purchase of furniture. In case of credit purchase of furniture increases because we get the furniture, and creditors for furniture also increases. So there is increase in assets on one side, at the same time there is an increase in the liabilities on the other side. Once again, the accounting equation tallies. Now let's move on to the expense related transactions. First being expense incurred, partly paid and partly which is not paid. So I have taken this as an example because it covers all three cases, where the expense part and the payable part. So 10,000 is the total expense, okay, of which we have paid only 8,000. Remaining 2,000 is not paid, unpaid. That means what? That is a liability. Expense payable is a liability, correct? So in this case, what happens? We have paid 8,000, right? So for that, we have paid by cash. So cash balance reduces to extent of 8,000. So assets reduce. Expense, total expense is rupees 10,000, which we have debited in the profit and loss account. So total expense 10,000 means what? It is a reduction against the capital. So capital reduces by 10,000. and there is an unpaid portion which is 2000. What is this 2000? It is expense payable, it is a liability, so there is increase in the liability. So when I substitute these values in the accounting equation, that is assets equals to equity plus liability. On the asset side, we see that cash has reduced, that means we have paid cash, right? So it is minus 8000, whereas on the other side it is minus 10000 plus 2000. Net is once again minus 8000. So you see that on the left hand side and right hand side there is only minus 8000. Correct. I hope this is clear. Moving on to the next transaction, expense paid in advance for future, like prepaid insurance. So, prepaid insurance is what? The insurance premium I have paid in the current year for the next financial year. So, in that case, what happens? Next year's payment I have already paid in advance. That means it is an asset for me. Service is yet to be received, but before receiving the service, I have paid. So, that is a asset. Prepaid insurance is an asset. So, prepaid insurance balance increases, which is an asset, and on the other hand I have paid, so cash reduces. So I can see that there is nil impact, because prepaid insurance is also one asset account, cash account is also another asset account. So one asset account is increasing, other one is reducing, so nil impact on the asset side. That means there won't be any impact on the other side of the equation. Moving on to other miscellaneous transactions, income received in advance. So when I receive income in advance, I receive cash. So there is increase in the asset. Whereas on the other side, there is an increase in unearned revenue. That means I have received the revenue, but I have not yet booked it in the profit and loss account, which is a liability, which I have received in advance, right? So it is a liability because I have not delivered service, or I have not sent goods for that. So it is some revenue which I have received in advance. It is like opposite of the prepaid insurance. So what happens? There is increase in the asset on one side and there is increase in the liabilities on the other side. So once again the equation tallies. The next transaction is depreciation on fixed assets. In short, let me explain what is this. Depreciation is nothing but reduction in the value of the fixed assets. So, if a fixed asset's useful life is 10 years, the cost of the fixed asset is being distributed over the useful life of the asset. So, this we charge it in the profit and loss account as depreciation. So, this depreciation is an expense. So, on one side, every year the balance or the value of the fixed asset is reducing. Yes, on the other side, so that is a reduction in the asset. On the other side, I am charging depreciation expense. Expense always means it is a reduction in the capital. So once again, assets is reducing on one side and capital is also reducing on the other side, making the accounting equation to tally. Having understood on all the transactions and how it is impacted in the accounting equation, now let us proceed to solving the problems on accounting equation format. First transaction is started business with cash of rupees 1 lakh. So what happens? Capital is invested. That means there is increase in cash by 1 lakh. So assets column for cash account, there will be increase in 1 lakh, so plus 1 lakh. On there is also increase in the capital or equity, which is 1 lakh. Once again you see that 1 lakh on the left hand side of the equation, and right hand side of the equation is also 1 lakh. Second transaction, opened a bank account with a deposit of rupees 10,000. So I open a bank account for the running of the business. So there is nothing but the cash balance reduce and I deposit in the bank. So both cash and bank is an asset account. The net impact on the asset side is zero, and you can see that there is no impact on the other side of the equation. Moving on to the third transaction, bought goods from Mr. Y for rupees 5,000. So what does it mean? So let us see, when it comes to credit purchase of goods, there is increase in stock by 5,000 and there is increase in the creditors, as we saw in the earlier example as well. Creditors balance also increase, that means liabilities increase by 5,000. If it is cash purchase, what happens? There will be increase in stock of 5,000, and because cash is being paid, minus 5,000, and the net impact on the asset side will be zero, so no impact on the other side of the equation. Sold goods to Shyam for rupees 3,000 of goods costing 2500. So there is, we can see that goods costing 2500 was sold for 3000, there is a 500 rupees of profit. So now you can see that if it is a cash sale, so whether it is a cash sale or credit sale, in both the cases there would be a profit of 500. But what we are going to see is, when it is a cash sale, what is happening? There is a reduction in stock of 2500 and we received cash for 3000 and there is a profit of 500. However, when it comes to credit sale, instead of cash it is in the debtors balance, and once again the profit is same. So in either ways, what you can see is that the assets side, the net impact on the asset side is 500 rupees, and on the equity plus liability side you can see that the net impact is because of the profit, which is 500 rupees. Once again, the accounting equation is tally. I hope this is clear, right? Okay, moving on to next one. Withdrew from business for rupees 10,000 for personal use. So drawings is nothing but a reduction of capital, correct? And because cash is being withdrawn, there is a there is a minus balance in the cash. So you withdraw from withdraw cash from the business, right? So the cash balance also reduces. So minus 10,000 on the asset side and minus 10,000 on the equity side. So once again, there is minus 10,000 minus 10,000 on both sides of the equation. Expense paid for salary and rent. So any expense which is being paid will always be, the expense account will be a reduction in the equity. So as you can see, when you say expense is being paid, that means cash is being used, cash or bank. So once again, an asset. So asset balance will reduce. So minus 50,000. Whereas on the other side, it is equity. Against equity, the any expense is a reduction against equity. So once again, it is minus 50,000 under equity column. Once again, you can see that the equation once again tallies. Next transaction, interest due but not paid of rupees 15,000. Okay, so there is an interest expense which is accrued but it is not yet paid. So when I say it is liable, it is a liability, and when I say it is expense is being incurred already, that means it is an expense which is reduction against the capital. What you can see is the net impact on the equity plus liabilities is equal to 0, right? And there is no impact on the asset side. Once again, the equation, accounting equation is tally. Insurance paid in advance of rupees 12,000. So in this case, as we saw in even in the earlier explanation, prepaid insurance of 12,000 is, prepaid insurance is an asset. So 12,000 is an asset and cash is being paid, which is minus 12,000. So net impact on the asset side is 0. Obviously, liabilities plus equity has no impact. Once again, the accounting equation is tally. So I hope that in today's video you got a full picture and understanding of how the how you got a full picture and understanding of what is accounting equation and how it is being applied in the transactions and how we are solving the problems as well. So we, you learned about, not only theoretically, you also saw how each transaction has the impact, and also